No worries.
Yeah, for I'm recording for other guys as well. So I was working the whole day today and I'm
So what
having
time do you start working?
South African time.
Mm-hmm.
It's 7 o'clock. I should be on my screen at 7 o'clock.
Oh, okay. Okay. And
Because it
then when do you close yourself? South African time.
well actually I finished trading at around I'd say 7, 8
In the
and
evening?
yeah in the evening.
Mm.
But I take a break at 11 from 10, sometimes from 10:30. I'm talking South African time, from 10:30 to 11. I mean, from 10:30 to 12,
Yes.
I go to the gym.
Oh, well, that's a good balance then. You're still young.
Yeah, I'm still like very young.
What's very young? Early 20s?
Mid 20s.
Oh, I'm catching on.
Yeah. Sorry, I didn't even cook today. So I was preparing something to eat now. I'm just having coffee because it's cold.
It's
So
been pouring today.
yeah, on the first session that we had, do you have any questions? I think I'll be
Mm,
happy to answer those questions over coffee.
I don't really have questions because from the notes I made this morning, I think most of the questions that I had popped up when you were explaining like MSS displacement and how you said time liquidity imbalances, that's when we need to enter at.
Oh my goodness, okay. That's the whole
And
model. That's exactly what I use. That's the only gun that I go to war with. And you don't need any. If you have that, then you have enough. You have enough. Understand?
now there's okay, so about the opening market thing. So I see here, okay, so if a price if the sorry, if the opening
Yeah.
price at midnight is lower than 8:30, then we need to consider the 8:30 opening price. Now, what's the gist over
Okay.
8:30? Why 8:30? Is it because that's the JC market open or the New York time open?
Okay. 8:30 at 8:30, those are important times. 8:30, 8:30, 9:30. Because normally at 8:30 we have news, right?
Mhm.
All the news they release at 8:30. That is 2:30 New York time. So the algorithm a price tends to be volatile around that time.
Yes.
And most often than not, we are almost close to taking out liquidity right around those times. By liquidity, I mean highs and the lows. It could be equal lows, equal highs, but we go to the chart and I'll explain more about that. I don't know if you
Okay.
understand what liquidity is. What's your understanding with that? Like, can you explain to me what you think liquidity is so that I take over from
I don't. Okay, so in terms of Forex, I don't understand what liquidity is because on my fraction, liquidity is the value of a company when it's being demolished. So that would be the assets over the liabilities of the company. So what's left over of the company. In relation to Forex, I don't know how I would then compare that to.
Yes. That's actually a good definition of liquidity. So price wants to liquidate people. So exactly how you explained it is what's left over after the company is like liquidity is what the company is holding in terms of right. Okay, your definition is better than mine. Let's continue. I want to tell you something. So price, if I say price seek liquidity, the
Yes.
algorithm, it wants to take money from people. And
Okay.
most traders use the information that's out there that this is controlled by buying and selling pressure. So if you believe that this is controlled by buying and selling pressure, if you see something like this here, you would think that buyers are strong around this area or around this price because price came back twice around this and it couldn't go below it. So you assume as a retail trader that if price comes down here again, and if it goes below here, then for sure, if it goes below here, then that will mean that now sellers are in control and this thing will keep going lower and lower. The algorithm looks, because there is liquidity resting above below here, those are sell orders. People want to sell even more here. You understand? Because
Yes.
they believe this thing is gonna keep on going lower. So they are still selling high, even if it's here. Forget about this high. This high is also a high you can enter and sell in. But for people that are retail minded, retail traders, the people that read all the books about trading that are out there, that they don't, the people that believe that this is buying and selling pressure, they believe that if price make relative equal lows like this here, it means that
Yes.
it's a strong support area. And if it goes here, so you can place an order to say if it passes here, you want to be triggered for a sell. There's an option for that in the market. So right now, I can tell you right now, there are many orders resting up below these lows here. And me, with the understanding of how the algorithm works, right? I know that the algorithm will just come like this here. It will do this. It will go below and activate the orders. And those people will think, now it's going into, and then it will come back up like this. Because now it's blowing the accounts here.
Mm-hmm.
Even if it wants to go low, it will do this thing here. But me as I'm not a retail trader. This is smart money concept. I trade with the banks. People say you trade with the banks if you trade like this. I trade the algorithm. I don't trade buying and selling pressure. I know exactly. I can read what price is telling me with these candles. I know what this candle is, that what each and every candle mean at specific times. And I want to see that at specific times. If it does this at specific times, then I know I wait for one more confirmation, which is structure. So after we take sell side like this, if you can look at the notes there, it will do something like this, down again, and then up. Once it breaks here with displacement, then it will have left a fair value gap somewhere here. Do you understand what a fair value gap is? It's
No.
an it's an imbalance. No, I'll explain the whole thing to you. Don't worry.
Okay.
And then after liquidity has been purged, because also once you see a new low like this, some people will still think, if it goes below this low here, okay, let me use a different kind of line. And they'll say, they'll put orders there. Say, if it goes below this low, it's going for good now. Me, I'm still waiting because I want to see, I'm smart money. I know what to look for in the market. I haven't placed any trades. I'm just watching. People have been purged here. Orders have been activated here. It went up It went down again. They added more orders thinking it's going lower now. They came back. It broke structure here. This is what I'm waiting for. We call this market structure shift after liquidity has been taken at specific times. At specific times. I want to see this thing here, market structure shift. So if you see me annotating my chart like this, it's because now
Yes.
the market is telling me that I am more willing to go higher because I'm breaking the high. After taking out sell side, I break this high. We call this intermediate high. And then,
Intermediate high. Okay.
yes. And then if price comes at discount, okay, at a discount level of this. So I'm going to use my Fibonacci retracement here to measure I want to measure this, not this actually. Let's say now price has returned. It has showed that it's now returning, but it hasn't reached here. I want to measure the midpoint of this. I mean you can see the high and the low of this price. I want to check because we use the Fibonacci. Let me explain what this is to you. So this Fibonacci tool here, this is like do you know what a number line is, right?
Continue, I grasp it along the way.
Sorry?
No, I don't know what it is.
A number line, like in maths, like the maths you did
Like
in primary. Okay, don't
like you
worry.
scale.
Yeah, this is like a scale of 0 to 100.
Oh, yes, yes.
And then, if you got 50%, it's like half the mark, right?
Yes, yes, yes.
Exactly. So we say if price is at equilibrium, it means we are trading at the midpoint of that range of whatever range that you are measuring. And we want to take trades. Let me just do this here. I want to zoom in on this. And I'm just going to explain what Fibonacci is. Okay, let's just do this here. Let's open up here. There we go. Okay, so I have a Fibonacci retracement. I have my levels that you can clearly see here. I want to show you something. These are my levels. Let me just use like a dark color. Okay. There. Okay. This is if you go, do you trade using a computer or do you use your phone? What do you use to?
Well, I've downloaded the application on my phone for now.
Do you have a laptop?
Yes, I do.
Okay, is it like a personal laptop or do you use it? You got it from work?
No, it's my personal laptop.
Okay, I'm gonna have to ask you to start get used to using your laptop and trading. And
Okay.
yeah, it will. Yeah, it is more user friendly. A phone, you can't
Um,
you can't do much with the phone. You can't do much with the phone. So
okay.
this is a Fibonacci tool. If you go on your trading view, it is available to you for free. It's called Fibonacci retracement, and you can just click there, and then you measure any point, right? But you won't have the same levels as me here. So you just click the line and go to settings. If you go under style, or you can just go to coordinates, but you don't need to go to coordinates. You can you can choose if you want this to be visible on a 1 hour charts or daily charts, weekly chart, monthly charts only, or you don't need to change anything here. You just go to style and you need to have the same numbers as me here because these are standard deviation. We use the most important numbers is 0 and 0.5, and then we have 1. So 0.5 and 1 is like 0, 50% and 100%.
Okay.
Okay.
Yes.
So if I extend my Fibonacci like this here, from here to here, like let's say I was measuring this line here, from here to here. I know that this is the midpoint of this line. So if we are talking about price, the upper part here, we call it premium. We say price is at premium if it's at the okay. Okay, let me put inside here. And then the lower part, we say price is at discount. I want you to write this down.
Yes.
We want to sell at premium, we want to buy at discount because this is high and low, right?
Yes.
So discount is for sale. And then
Isn't
premium,
discount for buy? Oh,
sorry, man. Sorry, thank you. I actually like that. And then this is for sell. Buy low and sell high, yes. So if you are using my model, this is the structure that you're gonna see, right? Because it explains everything. This is the structure. Let me just get this part right. So let's say you want to buy, you want to see it, what's happening here? Why is this thing doing like this here? Okay. I don't understand what's happening here. I'm just gonna use this. Oh my goodness, what the fuck is happening? Okay, let me just zoom out a bit, maybe. I don't know what's happening. Okay, let me try and do it again. Oh yeah, there you go. Okay, you wanna see like something like this. Why is it moving in angles? Oh my goodness, okay, let me just. Why is it moving in angles? The fuck? Okay, this is what you want to see. It's fine, you're gonna work with that. If you are buying, I'm just gonna stop there for now. So this is sell side, meaning retail traders will think price if it breaks below this low here, then it's gonna expand. I mean, it's gonna keep on going lower. So you would see me most of the times on my chart. I've annotated I annotate this as sell side liquidity. So I just put SSL for sell side, and then this is gonna be MSS for market structure shift. And then once I see price return here like this, once I see a move like this here, let's say it comes back, I just go straight to my Fibonacci and I want to measure this because I want to buy a discount. But I don't need to measure this anymore because I know exactly what I'm looking for in price here. There's always an imbalance. There's always an imbalance that's gonna be somewhere at the midpoint of this, or somewhere here, or just below the mid, or sometimes exactly at equilibrium price leg of this. Sorry about that. There's always an imbalance here. What is an imbalance? It's a fair value gap, a volume imbalance, or we have like an inversion. Sometimes it could be somewhere here. If it comes back to this, this is my buy entry. This is my buy entry. Yeah. the imbalance could be somewhere here, but if we just trade it past it like that, I extend it, and then if it comes back, that's what I'm going to use to enter, but always the price must be a discount. But
Okay.
especially when you're starting out, but me, because I know exactly what I want to see, I can even take it, even if it's a premium price like of this, because I'm on 1 minute anyway. And where I'm trading from on a bigger time frame, price is at discount because we recently took out a low and I waited for this structure here. This is what constitutes my entry. And then from there, price is definitely gonna go higher, no doubt. No doubt, but at specific times. So price seek liquidity. This is liquidity. And then after that, we wait for price at an imbalance to take it up from there. That's what I meant on my notes when I said price seek liquidity, because first of all, it purges liquidity and then it creates a structure for us and leaves an imbalance for us to take it up from there. Simple. This thing can also be explained like this here. Let's say, okay, let's first of all, let me just go show you. I want to show you this a structure in the markets of what I'm talking about here, because the drawings they do paint a picture, but when you are now in trading candles, when you see candlesticks, it becomes a whole different story. You need to get familiar with seeing this thing in price as well, not just in drawings, like how I'm doing here. Okay, let's just remove those, remove. Thank you. But for now, so far, so good, ne? So far, you do understand what's happening, right?
Yes.
Exactly. I like that. I like that. So I said our episode 2 will be talking about time, but
Yes, you said time, then price,
yes.
and then if there's time,
So
AMD.
exactly. So I'm just going to talk about my other instruments. So usually I trade currencies during London, and then during New York session, I cross over to indices. I trade Nasdaq and US 30. I don't know if you know what I'm talking about. Let me show you.
Nasdaq, yeah, I've seen a lot of hype of that on Instagram.
Okay, beautiful, cool. That's what I'm gonna show you here, US 30 and Nasdaq. I don't want to show you my annotated charts because you're just gonna get confused and stuff, but yeah, this is what I'm talking about here. And if you're looking, I want to just give you a glimpse of what I actually do when I'm analyzing the charts. As you can see here, it's just babysitting US 30 today. I was trading US 30 and gold. I don't know if you saw the signals in the group there that are. Did you see the
I
signals?
do, yes, I do see them.
Okay, perfect. So if you remember the screenshots that I sent you here, I said this is New York PM session from 1:30 to 4, right?
Yes.
So what happens? Yeah, so I can actually tell you exactly how the algorithm works by just looking at this. I know exactly what to expect here. I know exactly what to expect here. I know exactly what to expect here for all these sessions, okay? So we have the Asian session. This is for